with a close eye on those trade talks in China. U.S. Trade Representative Robert Lighthizer and Secretary of the Treasury Steven Mnuchin have arrived in Beijing. They are scheduled to meet with China's Vice Premier this week. Yahoo Finance's Kristin Myers joins us with the latest on what people are expecting or not expecting. Kristin?
Right. So those trade talks have kicked off right now with those lower level officials. They're currently being led by Deputy U.S. Trade Representative Jeffrey Garish. Now, Treasury Secretary Steve Mnuchin and also U.S. Trade Representative Robert Lighthizer will be leading the talks a little later in the week on Thursday. Now, not a lot of information has really been coming out around these talks, so both sides have been expressing hints of optimism. And some analysts are now predicting that those tariff increases which were set to kick in on March 2nd are now likely to be delayed or postponed. As you mentioned, investors have been watching this news. Markets were rallying a little earlier this morning. But I do want to remind everyone that there are some sticking points between those two sides, mainly around issues of enforcement and intellectual property protection and also subsidies on Chinese businesses. And I want to remind everyone that the president did say no deal would be reached until he met with President Xi Jinping, and then last week said that the two would not meet ahead of that March 2nd deadline. So that's a little bit of a bump in the road there. But Axios, reported over the weekend that the two are discussing a casual summit or meeting sometime in mid-March, though that meeting has not yet been set. So, with the government shutdown looming, everyone is really going to be watching to see if some motion forward can be made this week.
Quick question. I know the Chinese media is reported to have been playing down the deadline, which is looming. Should U.S. investors interpret that to mean anything, or is this just kind of the standoff before March 1st?
I think that is part of that standoff, right? We have seen some differences between the Chinese media and the American media when they've been reporting on those talks. But I think mainly what we've seen is a lot of optimism that those tariffs are not going to increase on March 2nd.
Thanks, Kristin. Appreciate it. We're joined by today's panel now, Yahoo Finance's Brian Sozzi and Ethan Wolff-Mann. And it seems to me that what's being priced into the markets is certainly not a worst-case scenario here, Brian. There seems to be some optimism.
Listen, the market is up, 13% since that Christmas Eve massacre on pure hope, just pure hope that some type of trade deal would get passed. Why do we have this hope? There is no reason for hope. We can't even keep the government open in the U.S. So if you're an investor, why not start positioning right now? You're probably sitting on some profits you made over the past couple of weeks and positioning your portfolio a little more defensively.
I mean, it seems like there is, in fact, I would say, some reason to be a little bit hopeful. China appears to be at least somewhat up against the ropes. And wanting to deal, the kind of tones that we've been seeing out of Beijing are, that of optimism. And there is a reason why the market has decided, okay, we are going to price this in at least solidly. I think that that deadline, I think everyone is pretty much banking on that can being kicked down the road.
Right, and isn't that why investors are, as you would say, perhaps being hopeful? If we're going to get another extension, that's good for another 3 months, right?
Yeah, it's investors being their typical themselves. They have a friendly Fed right now, and they might be playing it, okay, if we're not going to get a deal, maybe the Fed just stays on pat and just does not raise rates at all this year because there's going to be a slowdown. Look at the earnings season results. Caterpillar, countless multinationals have called out significant slowdowns in China. They're sending a clear message to administration. Get something done, guys.
I mean, it does seem like it sets us up for perhaps things to go wrong, however.
Yeah, I mean, the big thing that Kristin was saying about the Trump-Xi summit meetup situation to discuss things, I don't think that sort of line in the sand will be honored. I think they will figure out a way to deal with that, especially since we're seeing all this chaos on the domestic front. Even if Trump maybe can get somewhat of an upper hand against Xi, it doesn't seem like that is there's a ton of appetite for ratcheting the trade war right this second. That doesn't seem right.
But in some of the traditional places to run for protection, gold is trading down today. It's not going up. The 2-year Treasury, the yield is going up, not down. So where are the investors going, perhaps, until we get this extension?
Yeah, where should you go? If you're looking at results from, in this type of environment, maybe if you were doing rotating, you would look for dividend pairs. Well, what are dividend pairs? What are Coke and Pepsi? They're global multinationals with significant exposure to China. You go to a Caterpillar, you go to a Deere, but why are you going to put those trades on when a key part of their business is slowing significantly? And what is that? What would that mean? Maybe you don't raise your dividend as much as you would have otherwise in the past.
And at the same time, we have Goldman Sachs saying it's no longer recommending people buy companies with strong balance sheets as we see this dovish Fed. So that's another kind of shift.
Complete disregard for risk right there.
Yeah, really interesting. All right.